Okay, hi there and welcome to a video on constraints on business growth. This is for Theme 3 Microeconomics. So in this video we're going to look at 6 examples of barriers to business growth. All businesses seek to grow, to expand, to increase their revenues and ultimately their profits, but oftentimes there are some significant barriers to a business being able to expand. So what are those barriers? Let's look at 6 potential types. The first is the regulatory barrier or the regulatory hurdle. So growing businesses winning increasing market share may often come to the attention of the competition or the regulatory authorities. And some really good examples, which I'll give you in a couple of examples, businesses such as Amazon, Uber and Google, fast-growing digital businesses that are now significantly under the radar, if you like, of the competition authorities. Funding is really important for businesses. Financial constraints. Many small and medium-sized businesses looking to grow, they come up against financial constraints, including limited access to bank loans, for example. They may have little or no chance of raising money in equity markets unless they're listed on stock markets. Most businesses fail because they run out of cash. Skilled staff. Skills shortages is a barrier for all businesses, large and small, particularly in a tight labour market where unemployment is low, perhaps where migration has fallen, and where businesses are finding it hard to get the talented people they need. Disruptive technologies. Well, in a contestable market, if you're growing and succeeding, there is always the threat of entry from rival firms, and we know that technological advance and change is bringing down those barriers to entry, especially in digital consumer markets. The size of the potential market is also a barrier to growth. So businesses achieving success, for example, in a niche market, perhaps in niche furniture or fashion, may find limits to their scalability, whereas others successfully leverage an existing brand to enter a new market. So Uber, for example, now moving into Uber Eats and Uber Freight. There are also significantly, the 6th point here, the costs of a growing business. So one of the constraints on growth is that success creates additional costs. And often the operating costs of a business can grow more quickly than the revenues from your customers. It could be the case, for example, you face very high marketing costs of attracting each new lead, each new customer. You might have to pay increased insurance, for example. So these are some of the biggest barriers or constraints to the growth of a business. One or two examples of barriers to expansion in the news that you might want to follow up if you're interested. So here's a good example of where eventually huge fast-growing businesses come under the radar both of regulators and the politicians. So Senator Elizabeth Warren is arguing that the big tech companies such as Amazon, Google and Facebook should be broken up. There should be a process of demerger. She argues that by acquiring potential competitors, as in Facebook's acquisition of Instagram and WhatsApp, the big scaled tech companies have just made it much harder for smaller startups to compete on equitable terms. So she's proposing regulation which would undo those big mergers and perhaps break up those digital conglomerates. Uber has grown very quickly around the world globally. It operates in multiple cities around the world, in London, Frankfurt, Paris, Amsterdam, Madrid and Rome, for example, in Europe. But actually Uber has come up against regulatory barriers. It's actually banned at the moment in Denmark, Hungary and Bulgaria inside the European Union. Google, really good example of a business who increasingly is coming to the attention of the competition authorities. Just in 2018, the European Competition Commission announced another antitrust fine against Google. I think it was a significant penalty for using their AdSense advertising campaign, advertising platform, shielding it from competition. The EU believes that Google is misusing its dominant position in the online search market. In fact, I think that in 2018, Google actually paid more in fines to the European Union than it paid in taxes. For small businesses, skilled labour, getting the staff and keeping them is perhaps one of the biggest barriers. This is for US small and medium-sized businesses, and you can see that the biggest two barriers, the biggest two constraints to growing are hiring, qualifying and good staff and then keeping them. Oftentimes your good staff, you might train them up and then they leave, a brain drain effect. And secondly, the costs of attracting customers and finding new work, new business. The marketing costs of attracting new customers is much bigger than the marketing costs of selling to an existing customer. Notice there that cash flow for United States small businesses is the third biggest challenge facing them. And I think that's true for many small businesses. One of the biggest constraints facing small businesses is that they operate on tiny profit margins and their cash flows can often become negative. So small businesses in particular are exposed to unexpected changes in operating costs and revenues can have a big impact on their cash flow. Look at this chart from the UK. The median profit of all small and medium-sized enterprises in the UK was just £9,000 in 2018. The median profit of those bigger firms, 50 to 249 employees, was just under £250,000. But for firms employing between 10 and 50 people, the median profit was just over £1,000 a week. That's obviously a constraint for growth. Profits are low, and cash flow is uncertain. And there are costs of growing the business. Here's a good example from Spotify. Spotify is a very, very fast-growing business, hundreds of millions of users, but the cost of revenue is high for Spotify. So obviously they have to pay royalty payments to record companies. I think they spent nearly $3 billion on royalty payments in 2018. That is about 3/4 of their revenue. So it doesn't leave much to cover all of their other costs, sales, marketing, IT, payment systems, research and development, and much more, wage costs. So one of their biggest costs is royalties. The cost of revenue for Spotify is much higher than they would like it to be. So what we've done here is go through some examples, hopefully useful, of some of the biggest constraints on growing businesses.